Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into Next Level Charting. Thank you very much for joining us. I appreciate it. If you're watching this video on YouTube, and you like it, of course, please give us a thumbs up and consider subscribing. So we're going to start off with small caps and large caps, IWM and SPY, because we have a trend reversal signal for IWM. SPY, in contrast, remains in a strong uptrend and continues to bounce off its rising 50-day moving average. But I'm seeing some signs of risk aversion in the bond market. So we're going to look at junk bonds. We're going to look at a couple of ratio charts comparing junk to treasuries and treasuries to stocks. And then I'm going to look at three breadth indicators. And these three indicators, they've been bullish for a year or so, and they're still bullish right now, but there are three that I'm watching for a potential trend change in the S&P 500. Let's hit the charts. So I am here on StockCharts ACP, and I've got SPY here. And in the first window, I've got the Trend Composite. And in the second window, I've got the Momentum Composite. And the Trend Composite is used to identify the long-term trend, my long-term in this particular case. And I think the sweet spot for the trend is in that like 4 to 6 month range. And that's why these indicators are set the way they are. We'll go over those in a minute. And then the Momentum Composite is used to identify overbought and oversold conditions within that trend. And you can see more about this Trend Investor Pro Indicator Edge plugin by clicking on that link. You see the plug icon. Well, if you open that, you will see this Trend Investor Pro Indicator Edge plugin. Click that, and you will get an explanation as well as a video telling you about all of the indicators that are in this plugin. So we're going to use the Trend Composite. So I'm going to go ahead and close this. And I'm going to click on the settings in the Trend Composite, and you can see the indicators that I'm using. I'm using the rate of change of the 125-day SMA. That means when it turns up or down. I'm also using the Commodity Channel Index, 125 periods. That's about 6 months. When it goes above 100, it's bullish. Below minus 100, it's bearish. I'm using 125-day Bollinger Bands with one standard deviation. I'm using 125-day Keltner channels with 2 ATR values to set the bands above and below that center line. And I'm using Stoke Close 125. And again, there are more details about those indicators if you click on the link. So what I'm going to do is, returning to this SPY chart here, you can see that the Trend Composite turned bearish there right at the end of February and missed most of the COVID crash there, and then got a little bit of a whipsaw. You're going to get whipsaws in early June, and then finally turned bullish again there in mid-July. And so it's been bullish for a year now, and all 5 indicators are bullish for the Trend Composite. And then you can see the Momentum Composite. You know, we got one decent oversold reading here, a -4. That's when 4 indicators in that Momentum Composite were oversold, 4 of the 5 indicators. We got 3 oversold here, and that would have been in March. And then we got 1 oversold or 2 oversold in May. So oversold, the dips have been relatively light as far as SPY. And you can see it just continues to bounce off of that rising 50-day moving average. You know, this looks like the 6th bounce off of that 50-day moving average. I'll go ahead and close this on the side so we can see a more detailed chart there. So I'm going to remove those. And then if I open this up a little bit, here we can see some more details on those touches of the rising 50-day moving average. So SPY is still firmly bullish, but if we switch to IWM, we're going to see a different picture here. We can see IWM triggered bullish a little bit later in early August, and it had a little dip, but then had a huge run from October into that high in March, but it's gone nowhere since March. And we can see the Trend Composite was bullish until a few days ago, and now it's at -1. And that means that 3 indicators are on bearish signals and 2 are on bullish signals. So the net is -1. So when that happens, we ignore oversold readings because you only want oversold readings in the momentum composite when the bigger trend is up. For instance, if you look here in May, we had an oversold reading in the momentum composite. It got to -4. So that was a good oversold reading that gave way to a bounce. But now we've got this oversold reading, but the trend composite has turned net bearish. So I would be avoiding small caps right now. So now let's look at a couple of ratios. And I'm going to first skip down to the junk bond TLT ratio. Now I'm showing this as adjusted data, J&K colon TLT, to show the ratio between the two. And so this ratio rises when junk outperforms treasuries. So treasuries are the safest, the safe havens. Junks are the highest risk bonds. And so when they're outperforming, that's bullish for the market. But then they started underperforming in January, February 2020, and then broke down there in late February, early March. And so when they're underperforming, that's risk aversion. And then they started outperforming in the second half or the second quarter of 2020 and had a little flat performance into October. And this is when small caps outperform. And this is also when junk bonds outperform treasuries. There's a lot of risk appetite in the market from October into March. But you can see that risk appetite has waned because junk bonds have started underperforming treasury bonds. And this ratio broke below its 200-day moving average for the first time since October. Now, in the lower indicator window, I've got the 65-period rate of change for this ratio, and it's at -6.3%. So you can see that junk bonds have been underperforming treasuries for over a month now, and that shows some risk aversion in the marketplace right now. Now, this next ratio I want to show you is treasuries or stocks, SPY, which is the strongest ETF out there for the broad market, relative to TLT, and I'm not using dividends in this. I've got underscores. I'm interested in price appreciation. I'm not interested in the payouts, and that's why I show unadjusted data. So we can see here that stocks outperform treasuries from August 2019 until January 2020, and then started underperforming into February, and then there's the COVID crash starting in late February, early March, as stocks underperformed bonds or treasury bonds outperformed stocks. And we can see that since this bounce in March, that stocks have outperformed treasury bonds, but we're starting to see this roll over, and stocks, SPY, is starting to underperform TLT. So that means money is starting to prefer the safe havens. And if we look at the rate of change for this ratio, you can see over on the left, it's at -4%. And that's the lowest it's been since late May of 2020. And that was when it was on the rise. But now this rate of change is falling and it is negative. And so that means stocks are underperforming treasuries. The financial markets, they prefer to be in treasuries rather than stocks based on this performance picture. And that shows some risk aversion out there. So over at trendinvestorpro.com, I have a market regime page, and that's where I keep track of whether or not we're in a bull or a bear market with a tested and systematic approach using a number of breadth indicators and some S&P 500 moving averages. And we're still in a bull market, and I'll let you know when that changes for subscribers. And also, I covered 3 issues that are concerning me right now. We became oversold on Monday, and on Tuesday I put out a commentary looking for an oversold bounce. But there are 3 medium-term issues to watch going forward that suggest we could get a correction. And one of those has to do with seasonal patterns. And this is the premium page where I have longer dated articles available to subscribers. And one thing I have here is I've got seasonal trends for the S&P 500, and we're in the worst 6-month period right now. and August and September are the two worst months. And I go over every single month for performance for the S&P 500 over the last 25 years in this article. So take a subscription if you would like to check that out. So this first indicator here is the bullish percent index for the S&P 500. So this is the percentage of stocks that are on P&F buy signals. That is a double top breakout on the P&F chart. A stock is either on a P&F buy signal or a P&F sell signal, a double bottom breakdown. It's either or. There's no ambiguity with this basic P&F signal. So 55% are still on P&F buy signals, which basically means they have a higher high. They've broken above a prior high. So this indicator, of course, ranges from 0 to 100. And I put my bullish threshold at 60% and my bearish threshold at 40%. Because if you put it at 50%, you're going to get a lot of whipsaws. And I want to reduce those whipsaws and capture the bigger trends going on. I'm not interested in divergences. Divergences don't work that great. But you can see here, we got to move above 60% there in March, but it didn't last long. We got a whipsaw in May, and whipsaws are just unavoidable. They happen. And then you can see we got back above 60% in May, and we've been on that bullish signal ever since. We've had some dips into the 40% area. We didn't get below 50% this year yet. But as long as we hold above 40%, this indicator is bullish. If it moves below 40%, that means that 60+% of stocks in the S&P 500 have lower lows or P&F sell signals. And that would be a negative for the broader market or the S&P 500. Now, if we look at we're going to look at the silver cross. I'm not going to look at the golden cross. This is the percentage of stocks with a golden cross. And I'm looking at the silver cross the same way I look at the bullish percent index. It goes from 0% to 100%. And currently 56.6% of stocks have a silver cross, which is the 20-day above the 50-day. And we can see here that I've got a move above 60% here in early June, so it turned bullish, and it remains bullish. And if it moves below 40%, that would mean that more than 60% of stocks in the S&P 500 have a bearish, I don't know what the opposite of a silver cross would be. And the golden cross, the opposite is a dead cross. So I guess this will be a dull cross of some sort. But if you get that below 40%, that would be a negative for the broader market. And then the third indicator, and I always like to use odd numbers, that way you don't have any ambiguity. It's either a buy signal or a sell signal. So if you have two of these three turning bearish, that would argue for a correction. But this third indicator is the high-low line. And it's been rising for several months now, lots of months. You can see this is a 10-day EMA, and it's been rising this high-low line since well before September. So it's clearly in an uptrend. Even during the correction in October, it held. So you can see it's in an uptrend here. And as long as we get more new highs and new lows, which is what happens when the high-low line rises, then that is bullish. But if this crosses below the 10-day EMA, then that would signal that new highs are dissipating, new lows are perhaps increasing, and that would be a negative. So if two of the three trigger here that I've showed you, then I would expect a correction in the S&P 500. So those are three to watch going forward. So if you'd like to know more about trendinvestorpro.com, you can click on the link below in the description. Again, if you like this video, please give us a thumbs up and consider subscribing to StockCharts. Thanks again for tuning in. Have a great day, and I'll talk to you again next week.